What up, the RFT Nation? Today, let me show you how I was able to profit more than 10,000 Rand trading the Nas100 on the 26th of March 2026. If that is what you're interested in, stick till the end as I'm about to walk you through this thing and show you the step-by-step process that I took that made me to sell the Nas100 on the 26th of March 2026. Let's go. Now we are on the real price chart or clean chart of the NQ, the Nas100. And we have three elements here: the timing element, price, volume or volatility. And my trader model is built around these three elements that you're seeing right here. So they are so important. Now let's talk about the timing element first. And how do I go over the market to the timing element? Timing element helps you into understanding exactly when to be in the market, when it's the right time to trade that specific instrument that you are looking at. Is you know that the market is open 24 hours, but it doesn't mean that it is safe or clear to trade in all of those 24 hours that are there in the market. In the market there's a specific window period that is safe for you to trade that specific instrument that you're looking at. So personally, when I'm looking at the Nas100 and the USD, I look at it in the same way, but this is how I look at it. I look to take trade as from 1530 going forward. As you've seen me taking a position or running the trade, I took the trade somewhere there, and then after that the market took off all the way to the downside. Why do I take trade S from 1530? Because that is when the New York Stock Exchange opens. So therefore, the Nas100 and USD, they start to be active and they become more decisive in terms of the direction that they are picking up from them. Now, but the game doesn't start right there. The game doesn't start right there at 1530. The game starts exactly between 9 and 15. That is when I get to study the price to find out exactly how the market has been doing, so that at 15-day on the other side, I know exactly which direction to take. I don't just guess where to take a position, whether I'm taking a buy or I'm taking a sell, but all of those things I get it here. I study the market between 9 and 15. So what do I study for right here? Two things that I'm looking at right here in terms of the price. I want to find out if the market gave me a continuation or the reversal. So on this day right here, what I found out that the market opened and picked one direction and sealed everything right here at 15. So therefore, I'm looking for a continuation right here, as you can see. In this way, but don't make that mistake of thinking that every time when the market open pick one direction, then it's going to be a continuation. If you are seeing something like that for a continuation, you need to check the ADR, the average daily range, to see if the market is the market still have more rooms to continue or to move as a continuation, because the market can still open in this way and then ended up consolidating or ended up reversing all the way back down. What causes that is if the market opened and dropped and reaches the ADR or the average daily range. So that's why it is so important. So let me give you an example of this. On this day, the average daily range when we started the day was around 2.10. I think it was around 2.10. So when you want to check if is the continuation applicable here or it is still valid for the market to continue to the downside, since the ADR we started the day with it at around 2.10. now we need to check mark from the high all the way to the low to check how long has the market has been going. As you can see that it has gone, or it has only covered 1.42%, and the ADR for this day when we started around 2.10. So that means the continuation is still applicable, or the continuation is still valid in that case. But if the market from here to the downside had already covered 2.0% or 2.10%, then it was going to be a different story. We're going to see the market doing two things: consolidation or simply reverses all the way back up. So that is when most people are getting trapped. Someone will be thinking, I thought the market was going down. Now what's going on? Now the market has just changed the direction due to it achieving the average daily range from there. So this one, I found that they had ADR right here, it just only covered 1.40. So that means it's still valid for the market to continue to the downside. So that's perfect. So that's clean, right? So now, but before we can simply just drop all the way to the downside, so someone will think that since we are looking for a sell, so that means the minute we get to 15 or 15.8, we're going to simply open and drop like this. No, that's not how things work in the market. in order for the market to drop, what it have to do, it have to oppose first before it can drop all the way to the downside. In the same way, if the market have to go up, it had to open, drop before it can go all the way to the upside. So on this day right here, what it did, it opened, pick one direction, so I had to wait for it to open and get to my entry point exactly in line with on the other side of 1530 there. That is why it was easy for me to drop all the way to the downside. And this is how I constructed this trade as a sell right here. Then it was easy for me to simply say the market, I'm gonna take a position right here. My stop loss was going to be somewhere there, and then my first TP was going to be at 1:2 risk reward ratio. There, 1:2 risk reward ratio. You don't have to be greedy in the market. Just take what the market gives you. Forget about the rest of the run. In that case, that's like something that is out of order, and you are just not being realistic if you were to try to aim to catch like the whole run and all that. You don't want to do that. Take the amount of pips that the market is willing to give you, or it is easy for the markets to give you, and then leave out the rest for other people if other people they were to catch it and all that, because the market doesn't always give these long run in the market. Sometimes you just have to be in it and take the profit early as possible and then be out of the market from there. So taking profit early at 1:2 risk reward ratio is a lot. That's my game. That's what I do. My first GP is always at 1:2 risk reward ratio, and then I can hold maybe after that, right after reaching it, but with caution and noticing that the market can still now turn in my direction or turn now in the opposite direction from there. So that means I can start to activate my trailing stop. I can move my stop loss from from my stop loss level up there all the way maybe closer to the price point once I'm reaching 1:2 risk reward ratio, or simply just be out of the market. That is how I look at the market in that case. Then there are other stuff that we didn't cover, that I think we will cover as time goes. Things like going to the 4 hours time frame to confirm some of the stuff that we are looking at, or that I've just covered here on the 15-minute time frame, because some of the things that needs some confirmation to know exactly and have that and have that assurance that the market will be moving in that direction. So that's how we do it.